Should we travel to one of your favorite places?
Let's go to Adelaide.
Okay, Fraser MacLeod is standing by. He's senior partner at Shaw and Partners, and he joins us as he does every Thursday. So, what have you been watching, Fraser?
Hi there. Good to be with you from Adelaide. Haven't quite made senior partner quite yet, but I am one of the senior advisors here. Now, what have we been watching today? This is a market that has been fairly quiet, apart from BHP, which is driving pretty hard. BHP, our target price is getting a little bit closer now. We're getting closer to our target price. As it gets closer to that target price, we would be probably fading a lot of these iron ore plays. So a lot of value is being seen in the current price, and maybe getting closer to take that value. General market, really, we have two competing forces, don't we? We've got the great reassurance of massive, just gargantuan, never seen before, you can't find the words for it, of fiscal and monetary stimulus around the world. And you get earnings looking a little bit better in some of these tech names. So it's really tech that's been driving things alongside gold. Now, the market is certainly looking an awful lot better than if we hadn't had this stimulus, but it's really, are we betting on the quality of the stimulus just continuing to drive market higher, or are we really seeing that their earnings are going to be recovering, in an amazing V-shaped recovery, shooting the market up even higher from here? If you're that bullish, you really have to suggest that prices are going to go even higher. Currently, we're on 20 times forward earnings, so probably a bit too rich for us to be fully invested. Against the negatives are that we have COVID just streaking its way around the world. U.S. trade, what used to be trade tensions, now it's just U.S.-China trade tensions over everything, and geopolitics. As we get closer to the U.S. election, are looking even more risky. So a great environment for gold, as we continue to say, and it's nice to see that well above 2,000.
It has been another good day for gold, looking at $2,050 an ounce as we speak. Fraser, let's go and drill down to a sector level. Let's talk REITs. Now, every day I go to the office, I look around these massive glass structures in Sydney here, and there's no one in them. Makes me wonder about what the outlook for office REITs is going to be in particular. Where do you stand when it comes to the office space?
Yeah, well, where we stand is not there at all. So generally, we just do not see the reason to be exposed to office REITs or even retail REITs at all. We are very specific and targeted in just some individual names, some industrial REITs we like. But the challenge with office is that a lot of the evidence so far, the red flags, are pretty much based on anecdotals. And we were chatting away to just a few days ago to an investment bank in London. And they all reported to us from their homes when we did our Zoom call. We asked them, how many people do you normally hold in your office? And they said 300. And we asked them, next question, how many people are working in your office? And they said 10. And there's no sign of any change of that anytime soon. So in office space, it is becoming really quite a challenge. The risk in office space is obviously tenancies into next year. And as vacancy rates spike, valuations will dive. And the danger is that this is a long-term structural change as people get very comfortable working from home. Many businesses working from home has been working, surprisingly, so it's been working really quite well. Happy employees at home and potentially lower costs into the future. So the upside within the REIT space is probably retail online, but we do have grave concerns over commercial property. Yeah.
Speaking of retail online, Nick Scali having a fantastic day today. We knew
Huge.
that we'd see probably sales looking pretty good through May, June, July. I'm curious, though, when it comes to the outlook for Nick Scali, do you see the headwinds being posed by lower migration, by the housing market paying the pandemic, or do you see it as opportunity because it can secure its market-leading position, potentially even with some of these smaller companies going to the wall in this environment?
Yeah, look, I think for Nick Scali, so far so good, boom. But the web traffic was certainly up. The web traffic was up by 75%. So I think it is one of these businesses that is managing to adapt and adapt quickly. For those who can adapt quickly, the market obviously believes it's worthwhile backing, and I think that will continue. You could look at the bigger picture on statistics over immigration and the like, but I think the main driver for now, it's on the challenge for us is it's on 16 times earnings, so that's not cheap, but you would have to for those retailers that are able to have a a proven and accelerating online offering, I think the market will be and continue to be really quite comfortable with that. For those within retail who are obviously at risk, are the likes of Centre Group, as you mentioned, with the Westfield assets, getting valued down 10%. Vicinity looks even worse. Vicinity, nearly half of their rent roll comes from inside Victoria, so that's going to look really pretty grim. And if you look at some of these, the recovery of stocks like Vicinity, Vicinity went from 90 cents, went to $1.85, so 90 cents at the March low, $1.85 just a few weeks ago, and it's now trading a bit of $1.25. So market's obviously concerned that the relief rally within some of these retail rates is well and truly over, and is now starting to reverse back down close to where they were at the market bottom. So not wishing to be exposed there at all. Our key picks within, if you are wishing exposure to property, are really just riding on the back of that retail revolution that's really accelerated out. We've probably got in retail, this is no longer 2020. We've just suddenly, just kangaroo jumped all the way to 2023 in terms of the volume take up and the percentage take up of retail online. So, that's just caused an enormous boom and huge demand, not enough supply for warehousing logistics. So you can see why stocks like Goodman, which pre-COVID was a $16 stock, then in the sell-off went to $10, and Goodman is now back at is well beyond 16, and they're trading at $17.50. So there are some benefits within or stocks that are able to really see the benefits within the REIT sector, but it's mostly based on industrials. Everything else, you've got to have a big pile of caution. Yeah.
Fraser, let's look ahead to tomorrow. We've got some fairly big names reporting. We've got News Corp, REA Group, IAG, Horizon. What's on your radar tomorrow?
Look, for tomorrow, I think we'll just take a lot of these names as it comes. Many of those names that you just put out there, we don't cover directly. So I would be more concerned amongst some of the vaccine-based names, how much time that they've got left in them, and really just to stay leading through the big macro picture environment, which is rates to stay low for a very long time to come. So making sure that we're not fully invested in this market, and we won't know until the results come out. So we're not able to really make much of a prediction on many of these names because we have been pretty much in the dark. So you can take a bit of a lead from some of the tech names, but for everything else, look, I think we better assess it when it comes in. Right.
Well, that's what we're here to do, isn't it? Fraser MacLeod, Senior at Shaw Partners there in Adelaide. We really appreciate you joining us.
All right. Thanks again.
See you, Fraser.
Cheers, Fraser.